Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're looking at STAG Industrial's latest report, and let's just say they've been busy securing some new distribution deals. So what exactly is STAG Industrial up to? They are a real estate investment trust, or REIT, that focuses on owning and managing industrial properties. Think warehouses, distribution centers, that kind of thing. Companies need these places to store and move their goods, and STAG owns a lot of them. This report is a bit of a heads up about some new agreements they've made to help them sell more of their company's stock, essentially raising more money to possibly buy more properties or grow their business. Now, before we dive into what is new, let's quickly touch on what is already in place. They have common stock, which is what most people buy when they invest in a company, and it is traded on the New York Stock Exchange under the ticker symbol STAG. This is the usual stuff for a public company. The company has already had agreements in place since February of last year with a whole bunch of big names like Bofa Securities, Jefferies, and Wells Fargo Securities. These agreements basically let STAG sell its stock directly to the public from time to time, up to a big amount of $750 million. It is like having a team of salespeople ready to help them raise funds whenever they need it. They can also use something called forward sell agreements, which are a bit like a promise to sell stock in the future. But here is the new part. As of the 12th of February 2026, STAG Industrial has added another player to their team, Huntington Securities Incorporated. They've signed an additional equity distribution agreement with Huntington. This means they've expanded their ability to sell more stock. Huntington will be acting as a sales agent, and just like the other firms, they can help sell STAG's common stock. This new deal is pretty much on the same terms as the old ones, so it's an expansion of an existing strategy. This is all being done under a registration statement they filed with the Securities and Exchange Commission. Or think of the SEC as the main referee for companies that sell stock to the public, making sure everything is fair and transparent. They've updated their plan to include this new agreement as of the 12th of February. This isn't an offer to sell stock, but rather an update on how they plan to offer it if they decide to. The actual details of these agreements are quite long and technical, so they're usually included as exhibits. The report refers back to previous filings for the general forms of these agreements. This means the core terms haven't changed drastically over time, but they are continually amending and adding to them as needed. What does this all mean for STAG Industrial and its investors? Well, it shows they are actively looking for ways to raise capital. By bringing on Huntington, they are diversifying their sales channels and potentially increasing their capacity to sell stock. This could be a sign that they have ambitious growth plans, such as acquiring more properties or developing new ones. From an investor's perspective, it is important to remember that when a company sells more stock, it can dilute the ownership stake of existing shareholders. However, if the company uses that money to grow effectively and generate more profits, this dilution can be a worthwhile trade-off. Looking at this from a Warren Buffett perspective, we'd want to see if this expansion fits their long-term strategy. Are they acquiring properties in high demand areas? Are the new acquisitions likely to generate strong returns? This filing doesn't give us the specifics of those future plans, but the act of raising capital suggests they see opportunities ahead. The key takeaway here is STAG is positioning itself to be ready to seize those opportunities by having these distribution agreements ready to go. So, to sum it up, STAG Industrial is keeping its options open and its fundraising machinery well-oiled. The addition of Huntington Securities to their lineup of sales agents is a move to reinforce their ability to access capital markets. It is proactive business management, plain and simple. Alright, that is our breakdown of STAG Industrial's latest filing. What is your take on these moves and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord link in the description for more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.